Hey guys, Sean Terry here. What is up? I am super excited. We are going to have a great evening and we're going to talk about you. We're going to talk about the current real estate market and we're going to talk about how to wholesale during a recession. And we are officially in a technical recession. There's 2 quarters in a row that have been negative GDP. Now, personally, I think they might revise this, and we're actually going to go in a deeper recession in mid to late 2023. But the question becomes: the market is shifting, the market is changing, and how can we adapt of what's going on now? Let's look at some of the issues that's going on right now. We got current struggles in the marketplace. Now, I've been wholesaling now for the past almost 20 years now. I started back in 2003, and I wholesaled all through the hype in 2005. And I also wholesaled through 2006, 7, 8, and 9, which was a complete recession and a bloodbath. We're going to talk about that. And it's interesting because these exact same struggles that we're seeing today were the exact same struggles that we had back in 2007, 2008, and 2009. And there's interesting information I'm going to share with you. So here it is. So current struggles right now. You get properties under contract, right? And offers are coming in super low from buyers, right? Or you have cash buyers that are completely sitting on the sideline, right? And if they're going to make an offer, it's going to be a cash offer or a hard money offer. And that offer is coming in super, super low because they are cautious and they understand what's going on in the real estate market because it is corrected so fast, faster than I've ever seen before. Hedge funds have pulled out of the market or shrunk their buy box in certain markets across the country. Sellers still want retail, but they want a faster close. So you might be talking to sellers and they have this urgency and they want to get it done quickly, but they still don't understand. They're in denial about what's going on in the real estate market. Wholesaling, right? So wholesaling is where you get a property under contract, you close on it, and then you immediately put it on the MLS. That is a risky proposition unless you have massive amounts of equity. And then fix and flip. If you're fixing and flipping right now in this current market, it is highly, highly risky. Again, you have to have a ton of equity, and your timelines to get it done has to be super quick. So there is still competition in the market, meaning there's other wholesalers that are out there. There's other investors looking for properties. So sellers are still having competitive market. And so we still got that competition. We're still talking to sellers. Sellers still want a higher price, but then if we get the contract at a too high price, then we're going to have a hard time selling it, and we can't sell it in the market, and we're kind of screwed, right? So what do we do? What does the future look like? What does wholesaling look like? And where are we now in this market cycle that we're looking at right now? So we're in this market cycle. Where are we? So essentially what we're going to talk about is how to do deals. And we're doing deals right now in this current market. I'll actually share a couple with you. We did this deal right here in Monte Verde Avenue in Pomona, California. Lead came in, and got this property sold. And it's interesting. If you have the ability to negotiate, and we're going to talk about offers and how to negotiate, what price points you negotiate at, and then how you get monster deals like this. But we contracted it for $300,000, sold it for $430,000. It's a $130,000 spread. Obviously, that was a good deal. And I'm giving you the addresses to these properties. You can look them up. We assigned every single one of these properties that I'm showing you. So we did an assignment agreement on them. But you can see that these are properties that recently sold, and you can pull the details on them if you want. So this is exactly what we're doing. This property right here in Elizabeth Street, Port Jarvis, New York, under contract, $75,000, sold for $110,000, profit, $35,000 deal. Now that looks like a beautiful house, doesn't it? Right? Got this one in Morrisville, North Carolina. It's about an hour or so outside of Charlotte, North Carolina. We got it here. It's $80,000. House is in super rough condition. Sold price at 180. Now, the interesting about this one, $89,530 dollar spread. Now you see the difference here. Got it for 80, sold it for 180. It should be $100,000 spread. But our actual spread, now we received $94,000. In this particular deal, there was a tenant in place. We had to negotiate a cash for keys, so there's $5,000 that goes there. And we listed the property on the MLS. We're going to talk about why we did that, and then we're going to talk about strategy, right? So, here's the property. You see it sold for 180, but look on the right-hand side right there. You'll see, what was it listed for? It listed on July 10th for 150,000. It went pending in 4 days. And now this is little Morrisville, North Carolina. This property right here literally went pending in 4 days. And we listed at 150, and look at the close price. We got multiple offers on the property, and we accepted that offer at 180,000 cash deal, and closed that property quickly. So here's the thing is that, people go, wholesaling in a recession, how do you do it? What's the best way you can exit the property? What happens when cash buyers leave the market? And we're going to talk about what that exit looks like. We're going to talk about how to make strategic low offers to sellers. We're going to talk about how we educate sellers about the current market environment. And then we have that ability to get those low contracts on that deal. And now, if you get the property at the right price, of course you can turn around and sell it, right? You can list the property below all the other properties on the MLS. You can be the lowest available property in the area, and your property will move. And you're going to have wholesale buyers, you're going to have cash buyers, you're going to have hard money buyers, and also you're going to have conventional buyers. We're going to talk about that, what that looks like. So, here's just a example of some of the deals we closed here in the past week. That's a $94,000 one right there, 11,000. We got that one, 27,000, 19,000. That's $152,000 in this current market, to some cash buyers, some retail buyers that wanted to buy our properties, right? So this works. This is what we're doing right now. We do deals all across the entire country. I never look at the properties. We don't do inspections on the properties. We have buyers that go over and look at the properties, whether retail buyers or cash buyers. We do completely everything virtual, everything over the phone, everything remotely, and we do a lot of deals. We have a team of people. We have an acquisition team. We get properties under contract. We sell the properties nationally. And and we're going to talk about what happens to buyers during this period of time, during a recessionary period. Where did all the buyers go? Because they sit on the sidelines and they're waiting for the crash. We're also going to talk about too, here, and I got a lot, like I said, I got a ton of information we're going to cover, but I'm going to talk about the get rich quick blueprint, right? People are like, hey, I want to get rich slow. No, this is a get rich quick blueprint. And we're going to talk about when the market pivots. There's a certain indicator in the market that we can follow, and we're going to share with you here in a second, that we can follow that is the time to do a specific strategy. There's actually a couple strategies I'm going to talk about. I'm going to share with you one strategy that I personally did and made millions and millions of dollars off. I'm going to show you what that strategy is and how it works. So let's get into it. So if we don't know each other, maybe you've never met. My fault. I apologize. My name's Sean Terry, God-loving family man, 2 beautiful daughters, happily married for the past 26 years. Flipped houses now for 20 years, transacted over $350 million in deals, currently flip anywhere from 15 to 25 deals a month. Host the Flip to Freedom podcast. I started that back in 2010 because I love to teach, right? So I just started a podcast. There was no podcast in 2010, right? There was 3 real estate podcasts when I initially started it. And I started the real estate podcast. Now we have our 15 million listeners, 196 different countries. Creator of the Flip to Freedom Academy, which created now courses. And we, teach over 20,000 members of our membership site. One of the best-selling authors, currently owns 760 student housing units. I just sold my house in my beach house in Southern California because California is getting crazy. And I currently live here in Phoenix, Arizona. So I love this business. I got started back in 2003. And in 2003, the market was very similar to where we were this past year. And I'm going to share the similarities and where we are, and we're going to talk about that. So stay on till the end, if you would. And we're going to send out to everybody a document of all the links that I'm going to share in these that you can watch and you can keep abreast of what's happening in the real estate market. So what is happening in the real estate market? So if you stay on to the end, we're going to give you a document. That document we're going to send to you. And we're going to take all the links that we talk about. We're going to put them on a sheet and we're going to give it to you so you can watch and track the real estate market on what we're doing. So I'm going to exit out of here. I'm going to go into my computer, and I'm going to go real brief. I'm going to go real fast because I have a ton of information to share with you. This is inventory in the marketplace. You can see, obviously, it goes up and down almost like a stock chart. You have inventory spikes and you have inventory declines, and the gray areas are the recession, right? Those are recessionary time periods. So in the 1990s, we had the savings and loan recession. Back in the 2001, we had the Twin Towers that were hit, and we had the dot-com bubble that happened. So here, obviously, we know was the big one, which was the Great Recession right here, and the housing market collapsed. So I got started back here in 2003, May of 2003. I got my first check. At the time, there was 3.9 months of supply of inventory. Houses were moving incredibly quick. I could get properties under contract. I could find cash buyers for the property, even though we didn't have all the tools that we have today. But it was a good, stable market. Inventory was there was a low. Inventory was low, so if you could find a deal, you could sell that property. And I talk to a lot of wholesalers. I speak at different events and stuff, and people are used to selling stuff at 80, 85%, or 78 to 83% of the retail value of the property in these hot markets across the country. And now that has changed. They can't sell properties at 80, 83%, 85%. They're having to sell them significantly less. So we're going to talk about that and what is happening. So if we go back in the computer here, right, and we go through and we say, hey, listen, we have this period of time right here is what's called a sideways channel. And this sideways channel is where we have low inventory environment. And then it's actually really, really good time to make a ton of money in real estate because there's a equilibrium in the supply and demand. Now, what happened is, in 2004, 2005, the market took off. Now, what happened is, for me in 2004, I implemented what I call now, what I'm going to share with you, the get rich quick strategy. And I was able to get 120 properties, basically acquire 120 properties, $36 million worth in a matter of like 14 to 18 months. And that 14 to 18 months, then the market inventory got low. The market was crazy. It went through euphoria in 2005. This is right before we went into a slow correction, and then obviously the ultimate crash. But I had $36 million worth of properties, right? There are rental properties primarily acquired through pre-foreclosure. We're going to talk about the strategy and what we said in the contract, what that looked like. I'm going to share with you. But I had a group out of California come in and buy all these properties like in a tranche. They bought them all in. They bought them in blocks of like 40 to 50 properties. And we happened to sell all these properties in 2005, from like March to November of 2005 at the height of the market, and made millions and millions and millions of dollars. Now, if we go back and look over here, back here, it was a great time to be able to do that because inventory was low and there was that euphoria in the market that came in, and buyers, they were coming in like crazy looking to acquire properties. Then what happened, right? What happened is that during this time right here, inventory started to increase, right? It increased where, remember 2007, late 2000. So September of 2007. September 2007, if you can see, we had 9.2 months of supply on the marketplace, 9.2 months of supply. So that 9.2, if you felt the market, you knew that the market was correcting, but it was, it was very similar to where we're sitting right now, 9.2 months supply. Sellers were starting to slash their prices. Most of the sellers were not in the know. Most of the sellers were still in denial, and they wanted higher pricing for their property. So they would list, and it would sit there, and it would sit there, and it would sit there. Fix and flippers bought properties, they fixed them up, they stuck them on the market, and it would sit there, and it would sit there, and it would sit there, and they have to start slashing their prices, digging into their profitability. So that's what happened during that 2007 era. The market was correcting, but it wasn't a bloodbath like it was just almost 12 to 18 months later. Now, we look at it, we go back, what happened? What happened right here is the market inventory increased. We officially hit a recession. And then all of a sudden, boom, we hit a total of 12.2 months supply. So let me tell you 12.2 months supply looks like. 12.2 months supply, houses in Arizona, because the more supply in the market, the less the price is going to be. It's going to put a demand, it's going to put a pressure on the pricing, because buyers are going to come in and they have a pick of the litter. They can pick any property they want, and they're definitely not going to pick a lot. So what happens is sellers start slashing their prices because they want to sell quickly. Now, in the stock market, it's different, because all you got to do is press a button and you can sell, or you call your broker and you can sell. With a house, you got to get it, you got to list it, and then it sits there, and you got to price it right. So you start dropping those prices so you can get someone to buy the property. So in Phoenix, Arizona, houses that were $230,000, $240,000 dropped all the way down to $20,000 to $30,000. $20,000 to $30,000. This happened in parts of California, like Riverside, California got hammered. Vegas got hammered. Parts of Florida, all over the condo market in Florida got hammered. And it was an absolute, there's foreclosures everywhere. It's a bloodbath, right? So people go, well, it's different. It's different than 2008. There was that banking crisis that was going on. What is the catalyst? We're going to talk about the catalyst and the comparison between the two. Now, this is not like 2008, but there is a massive $4 trillion catalyst that we're looking at right now. All right, so where are we now? Where are we now? Well, let's go back and look at it. We are here. Now, what happened? The market, the Federal Reserve did something incredibly not unique, incredibly predictable during this time right here. And we're going to talk about what to make this pivot. So when is a good time to buy real estate? Is it a good time to buy real estate as we have increased inventory? Is it a good time to buy real estate when we're kind of up here and then you get forced appreciation through the market? Well, it's a good time to buy real estate up here. Why? Because it's low at a high inventory, and then you get forced appreciation in the market, especially if you get it below market too. You have two components that's adding to your wealth. So we're going to talk about what that pivot point is so we can look for it, because it will be coming here in the future. Like I said, I think we're going to be hit a recession here in the next 12 to 15 months or so, or even less than that. And we will be hitting a recessionary period. So now if let's zoom in. Now, even though we're technically in a technical recession right now, like I said, I think they're going to revise that, and then we'll have the real recession will be next year. All right, so now we have this. Look at this. We have month supply 3. We're down here back in 2003 when I got started. Month supply 3, very similar to what the market was. Now, a lot of people watching this right now got started back in 2011, 2012, and they've been going and riding this market right here for the past, from 2012 all the way now. That's been pretty much a sideways channel, right? They've never experienced this type of inventory surge into the marketplace, but now we are seeing it. Look at this. absolutely astronomical. I'm just insane about the amount, the speed of which this happened. Now we went from 4 months supply, to like here up to 8 9 months of supply from like 2003, to 2007. So that's significant time. So we got this over here that we went from 4.1 months supply in 2021 up to here in May. That's less than 2 years that we see such a massive increase in inventory, and we're sitting now at 9.3 months supply, or we're sitting at January of September of 2007. So we have increased. Now I believe this is going to continue. Now it's going to go up and down like this. It's going to go up and down and up and down and up and down and up and down. But I think it's going to go up. And why is this going up? Well, number one, we got interest rates that have gone up. If we go back over here, right, we got interest rates. Look at that move in interest rates down. Interest rates have got up right here. And the Federal Reserve, again, just raised the Fed funds rate by 75 basis points. So could we hit super high interest? I don't think we're going to hit this high, but we could get upwards in the 8-9% for a mortgage. What do you think that's going to do for the affordability of houses? Is going to put pressure on that, right? So now what's the catalyst? What's the big catalyst that's different from 2008? Well, 2008, we had all the subprime mess that was going on. Anybody could get a loan. Now, a lot of the paper now that has been written for houses, they're A paper. They're pretty good. They can qualify for a house. They can afford a house, right? The catalyst is a couple different things. Number one is this right here, the Fed's balance sheet, and it's called a roll-off. So if you see here, they had $4.2 trillion of their balance sheet. And then all of a sudden in 2020, it was a spike and they doubled their balance sheet. And the doubling of that balance sheet means they did quantitative easing and they pumped money into the market. Now, what we have to understand is when the Federal Reserve pumps money into the market, real estate prices go through the roof, stock market goes straight up, and commodity prices expand. That's exactly what happened. But what happened now is the Federal Reserve is saying, we are going to quantitative tightening. They started in January. And what has happened? The stock market has gone down. Real estate prices have come down, and then commodity prices have come down. So if we look at all of that, it's because they're pulling money out of the market. Now, never before in history has the Federal Reserve, if you look back, pumped that much money into the market at any one time. Now they're going to have to pull it out, and they're going to pull $4 trillion out of the market. That's going to collapse the equities market. Now, here's the interesting thing, right? Homeowners have a ton of equity. They have a ton of equity in the property. But when it comes to sellers, they're slashing prices left and right. Affordability, we're back to affordability in 2007. Look at this. We have in actually April 2006, we have our affordability index. It's over here. That's June of 2006, 71.7. And we go back over here all the way to the right. As of May of 2022, we have a 7.15 affordability index. Look at this. The affordability has plunged in 2022 because people can't afford houses. All that impacts the real estate market. So what do we do as real estate wholesalers to navigate this and be able to make money in this? Well, here's the interesting thing. I'm going to go back to this chart real quick, and then we're done with this chart. We're going to move on. This right here, what buyers purchase during this time frame, this increase right here, and as this time frame happens, who buys during this? Right? Cash buyers are pulling out of the market. Hedge funds have started pulling out of the market, right? Just like they did in 2008. Guess who continues to buy in this market? The only difference is they're looking for better deals. Who's buying? You got cash retail buyers, or you've got retail buyers that's doing retail financing. So you've got to learn to pivot when it comes to selling properties to list your properties on the MLS and be able to take and be opportunistic on what that type of offer you can take. So we're going to talk about that here. We're going to talk about types of offers. We're going to talk about how to do deals. Now, it's created what I call the perfect storm, perfect phenomenon. Basically, when you have more distressed sellers and you have sellers that start to understand the market and start dropping their prices, there are buyers in the market, and we'll talk about them. But when you're wholesaling houses, nationwide wholesaling is what we do. We get a property under contract, and we get it under contract for a price. Right. And we can get that for 300,000, and we can turn around like this one in Pomona, sell it for 430,000, make 130,000. This one in Port Jarvis, 35,000. We talked about that one. Morrisville, that's an $89,000 deal. Here's another one in Greenville. Right, we got this one under contract for $78,425. Sold it for $127, a $48,575 deal. All these deals right here. This is another one, Jacksonville, Florida. We got this one under contract for $155,260. Sold it at $175, almost, I mean, practically retail for the property, for a $19,740 profit. These are all deals we've done in the past couple weeks, right? And I wanted to share this with you because we are doing deals. We're selling to retail buyers. We're selling to cash retail buyers, right? And we're getting exposure and selling our properties. Now, if you're not familiar with what wholesaling is, we have a contract. We get that property under contract with a motivated seller. We get it under contract at a discount. In this case, let's call it $50,000. And then what we do is we get under contract with a buyer. This could be a cash buyer. This could be a retail buyer. This could be an agent that submits an offer through a buyer, with a buyer. And we can do an assignment contract, or there's another way I'm going to talk about how you get paid. But 90% of our deals are done via an assignment contract if they are cash deals, or we have another method to get paid, and we're going to talk about exactly what that looks like. In this particular situation, you would get the $10,000 in the middle, right? You get that $10,000 in the middle, and what would happen is that $10,000 goes to you. Okay, so now you have a contract for 50. You turn around a contract for 60, and you get the difference, the $10,000. That is what essentially wholesaling is. You contract a low property for a low price, and then you turn around and sell it. I see a lot of people right now, they don't understand how to negotiate. And if you don't understand how to negotiate, you won't be able to get those properties at a lower price. And they don't understand how it's a numbers game. And if you don't do that, then all of a sudden you're going to be stuck with properties, trying to sell properties in a market that, it's price driven right now. Buyers are looking for deals, even retail buyers looking for deals. So if we go back, nationwide wholesaling can be done on a part-time or full-time basis. You can profit very quickly. Business can be done from anywhere in the world. Business can be successful in a recession. Reduce risk by paying for speed. Business can be scaled to unlimited income. Business can be started with minimal capital. We'll talk about that. So what is the ultimate nationwide? Now, this is different because this model right here allows you to do deals nationally, but it's a little twist when we used to do, when we did the business prior to the recession, right? When you look at the recession, all we had to do is we can find cash buyers in certain markets. And there's tools out there, I won't name them, but you can find cash buyers and your property could sell, and it would sell fairly quickly. That is off the table now, right? You have to pivot to what's going on. And we pivoted about almost 6 or 7 months ago when the Federal Reserve came out and said they're quantitative tightening. I knew there was going to be a real estate correction. I've been saying there's going to be a real estate correction. I was early on the real estate correction, but now I'm not. And then now we pivoted to learn exactly how to get our properties. We have a full-time person that all they do is list properties on the MLS. So if I go back over here, right? What we have to do here in the steps here is we gotta select the best market. There's 3 ways to find distressed properties or motivated sellers. We're going to talk about how to make strategic offers over the phone. There's a 4-step method to make strategic offers over the phone. And we're going to talk specifically about the offer price. That's incredibly important, how that offer price differs in a recessionary environment. And also, we're going to talk about when you're talking to sellers, how you educate the sellers, incredibly important. Finding the right closing agent on a nationwide basis, listing your properties on the MLS. What does that look like? Selecting the right offer, because you're going to get cash offers and conventional offers. How to get paid. You got either retail or you can do a wholesale transaction. So this is the ultimate recession model that you can turn around, and you can use this method. We're using it to make a profit right now, and you can basically save your wholesaling business. I spoke to a room, actually 2 rooms the other day, about in the last 30 days. All wholesalers, all real estate. So there was one guy in there had 1,200 properties. Man, I leveraged it about 85%, and I feel sorry for him. There is other guys in there that had a big fix and flip business. You know what? I would unwind if it was me. Now, I'm just saying what I would do. You know what I mean? I'm not a financial advisor. I can't recommend whatever, this, that, and the other. The bottom line is I'm saying if I had a huge fix and flip business right now, I would wind that down as fast as possible, and I'd focus on wholesaling during, as we have an inclining inventory levels and pressure on the market, and the buyers are exiting the market. Wholesaling is the way to go. You want to wholesale your brains out, stash as much cash as possible, and then wait for the right opportunity. And I'm going to tell you what that right opportunity is. Now, so we've got this model right here, nationwide wholesaling with a twist. And that twist is being able to sell your properties and be able to do deals. Now, selecting the best market to do business. Here is a list. This is from Redfin. These are the top 10 metros in the United States with fastest growing sales prices. Now, you can specifically target these different areas, and guess what? You can get properties under contract, and you could turn around and you could sell those properties. Now, it's interesting. Look at these right here. They're all Florida. They're all Florida markets that are actually going parabolic when it comes to pricing until inventory starts to hit. Now, what do we do to pick a market? We have a certain marketing method I'm going to share with you, and we let that marketing method pick a market for us. Like we did Macon, Georgia. We've done some deals. Greenville, North Carolina or South Carolina, Morrisville, North Carolina. So these little markets, we actually let this unique marketing method find us the market. We got a property under their contract, and then we turn around and then we send strategic direct mail to that market. Now, what is so great about this is that it is small markets. It eliminates competition. Now, look at this little market right here. This is Greenville, South Carolina. This property right here, Greenville, you can see it's an active market. There's 1,198 homes active. There's 201 price reductions. The median price is about $400,000 in today. A month ago it was $399. A year ago it was $329. So there's increased value there right now. But what I do is I like to target specific markets like this one that has a higher median home price. Why? Because we can expect about a 10% fee on a property, right? A wholesale fee, about 10%. So on a $400,000 median home value, we can expect about a $40,000 deal. That's why California is such a popular market, because you have larger ARV, you have larger value median home prices. 700,000, you'll get 70 grand on a lot of these properties. So those markets with larger spreads, right? Larger spreads or larger median home prices is a target market. And also we look for properties that are roughly about an hour or so from a major market. Now, this one here in Greenville, I think this one is, actually, I didn't look at this one, where this one is, but I know Morrisville is about an hour from Charlotte, North Carolina. Now, the 3 best ways to find deep discount properties. Now, here's the thing, is when we go through these 3 ways, we're going to talk about the 3 ways. It's going to be free methods, cheap methods, and paid methods. Now, there are different people that are watching this right here. There are people that have already done deals and they have a marketing budget and they're okay with spending X amount of dollars on marketing. You have other people right here that are just getting started and they have a very limited budget. So I'm going to talk about free methods. I'm going to talk about cheap methods, and I'm going to talk about paid methods. And those methods will enable you to turn around and get deals all across across the entire country, which will be, amazing, right? So you can get those deals, you can turn around, get them under contract, and then the goal of these marketing right here, so you understand, and I can explain it to you here, is that the goal of this is to take free methods, take cheap methods, and then reinvest into the paid methods, right? You reinvest 25% back into the paid methods. So if I go in here, let me go to the free methods real quick. Free methods, we have a specific script that we use to call for sale by owners. You can just Google FSOB, FSBO, for sale by owners. You can go on Craigslist and find for sale by owners there. You can go on, we have a whole list of the top. I think it's like 20 sites that have for sale by owners. You can go to Zillow and find for sale by owners. But these are people that want to sell without a realtor. Now, I'm not saying every one of them is going to be like just drop their price to make the deal make sense, but there is a really, really good chance you can talk to a seller and get this property and negotiate and educate them on the current marketplace and be able to get that property at a deep discount. So that is a free method. That's a great method to talk to sellers, and it works really well. It doesn't cost a dime. It takes more time and energy on your part, but here's the thing. You get one deal. You get a $10,000 deal, you reinvest 25% back into marketing. Now you have a marketing budget. You take that marketing budget, you spread it over 4 weeks, right? And now, guess what? Now you have a weekly marketing budget, and that allows you to generate more leads that will give you more opportunities to turn around and generate more deals and more checks, right? So that is the second method right here is the cheap method, is going into an incredible software. It's one of our #1 softwares that we use right here, REI Automator. If I go here and I put Greenville, South Carolina, we got 89,000 properties. Now, if I go here and I go boom, and I want pre-foreclosures. So let's say if we're going into Greenville, South Carolina, what we can do is we can hit all the pre-foreclosures. We can hit all the tax delinquency properties right here, people that haven't paid their property taxes. We could hit all the vacant, or we can hit senior owners. Now, why is senior owners so important? There's 4,583. We can go property characteristics, and we can say, okay, we want single family or we want multifamily 2 to 4, right? And we can say we want it off the MLS, right? So we want it on the MLS. No, we want it not on the MLS. And we can go ownership. We want to make sure that it's just an individual and not a corporation. So then we have the ability to skip trace them, right? And then we can say equity. We want to make sure they have a minimum of 50% equity in this property. So that's really good. 2,716. Now we could do one more thing. Ownership info. We could say on here, number of years of ownership, 10. Right? So we could say, hey, so there's 2,700 properties that there are senior owners, single family or multifamily, not on the market. They own 10 or more properties, or they've owned it for 10 or more years. So they already use the depreciation on it, or they're far in the depreciation. And they have 50% or more equity in the property. That's a great list, a phenomenal list right there. Why? Because there is a massive amount of baby boomers who've invested in real estate. They see that the market is now correcting, and now they want to unload or divest. We just got a call from a seller, an older seller that has close to 100 properties, and we're working on right now gathering the information to work to help them divest and get rid of all those rental properties that he has. They're seeing the market. They don't want to go through another 20-year cycle like we did from 2008, or maybe a 15 or 16-year cycle. They don't want to go through that again. They want to sell now and be able to get out of the properties close to the height of the market if they can. So this is a phenomenal list. So what would you do with this list? What's a cheap method to do it? You take this list right here, you select it, and then you go and you skip trace that list. Now they're individuals. You're going to get phone numbers. You're going to get phone numbers, and you're also going to get emails with these people, and you can reach out. And guess what? You know, people go, oh, should I get a dialer? Or should I get some sort of software or something like that? Just pick up your phone. just pick up your phone right here, pick up the phone and start talking to sellers, and you can turn around and you could get them on the phone and talk to them. That's what I did when I first got started. Don't make it complicated. You can text them. You can send them a text. Hey, I just called you about your property. Wanted to see if you wanted to sell it. You could hand write letters if you want and send them a postcard. Send them a cheap postcard if you want. You can email them. You can send them an email. You don't have to do everything in bulk, but you could work this list. And I guarantee if you work this list in a small little town, they're not getting text messages like I am all day long from other wholesalers wanting to buy my houses, right? I mean, it's like crazy. So the bottom line is this is a phenomenal, cheap method that you can do, that you can get properties under contract. And you can use easy resources. And what is your motive again? Your motive is to get the deal so you can turn around and reinvest back into marketing. Now, there's basically 3 best paid methods. That's Google AdWords, online, pay-per-click advertising. There is big like direct mail, which we'll talk about here in a second. And then there is TV advertising. So I'm just going to talk about this one right here. I'm going to talk actually 2. And this is direct mail and Google AdWords. Google AdWords is when someone types in the address, sell house fast for cash, an ad comes up and they'll click on your ad, they'll land on your website, and what's going to happen is they will reach out to you to sell their property. Now, here's the interesting thing, and here's just like a snapshot of Google here. So you got Google AdWords and Bing. So here's the interesting thing. We set up the campaign on a maximized conversion, and we target the state instead of targeting the city. Every pay-per-click advertising guru I've ever talked to, it says you got to be hyper-focused and geolocated, and you got to target on the zip codes you want to hit, right? And you got to do it on a cost per acquisition basis, or called CPA. Now, this is a complete different. It's that you're targeting the state and then you're using maximized conversion. Once you get 100 conversions, then what happens is Google learns your conversion, who your converters are, and then be able to serve up your ads to like and similar people. So what does that mean? So if you see that little link right there, it says https takeout.google.com settings /takeout. If you take a snapshot of that link right there and then go to it, that link right there is going to bring up, when you're signed into Google, all the personal information that they are storing on you. Now, me personally, I have over, I don't know, I think it was like 4 to 5 gigabytes of data that they have collected and they're housing on me, from your searches to your phone numbers to your credit score to your everything you have about your property, all that type of stuff. They have all the goods on you. And this is why, remember, they got in a big trouble, with all their data sharing and all their data stuff that they did. Well, the reason why is because of this. So go check out that link when you have fun, takeout.google.com /settings /takeout. Now, the bottom line is that what they do is they have all that data on you and I. And what they do is then they find similar, they have the 100 conversions, and they find similar or like people, and they display advertising in front of them that's like those similar conversions. So your cost per conversion gets better and better and better. Now, the second way, and believe me, I can tell you, I mean, let me just show you my account real quick, just so, I mean, I'd rather just, here you go. This is my account right here. And you can see I've spent $3.25 million on just this account. I have multiple different accounts. And this is account this one, I started back in 2019, right? So I started doing deals, started in this account in 19, and I spent over $3 million on this. So it's amazing. So we've got 32 in this particular campaigns right here. We have 9,500 conversions in there, $64 for our nationwide here, 57 for this nationwide, and 186. And these are for California leads. We've done a lot of deals in California. We've made, I mean, that one deal alone, just that $130,000 deal. Look at, 166,000, but we got one deal, 130. We got another deal. We did a $192,000 deal just on those two deals alone, not including all the other hundreds of deals we've done in California, have been highly, highly profitable. All right. So that's my campaign real quick. Let me go back over here. The next best method for marketing is the inheritance list. If you want to get a hold of the inheritance list, and you can find them in small markets across the country, reach out to Micah at usleadlist.com, usleadlist.com. Ask for Micah, and Micah's there, and say, I want to buy a lead, your inherited list in a small market, and then you can mail that market. And what you do is you send them a Street View postcard that you can get at yellow letter mail, and you're going to have a great response. You're going to have a great response on those things, and you can do deals. Inheritance list is a great list. So these are the two paid methods that work incredibly well. Let's go over strategic offers over the phone. Now we do 4 steps to getting deals signed over the phone. We do a deep dive to gather information about the seller, build rapport with the seller. We do the set. We set the appointment. Now, here's the interesting thing. Once we get the information from the seller, we build rapport. We're going to get their 2 asking prices, right? We've got 2 asking price. We got the initial asking price, and then we've got the asking price after we've asked them about the repairs, and after we emphasize that we are paying cash, we're closing quick, or closing on your time frame, and what is the minimum cash you would take for the property before I go talk to the underwriter and see what the best we can do is. Now, what you're going to do is you're going to get the first and second asking price. So what you're going to see is a drop from the first to the second asking price, right? Now you're going to take that second asking price and you're going to do what's called a set. A set is you're going to set an appointment to get back on the phone in 30 minutes. You want to get back on that phone in 30 minutes. Now, what you're going to do is you're going to get back on the phone in 30 minutes. Now you're going to do the research about the property. You're going to figure out your offer amount, and you're going to prep your contract so you can send it out to the seller and have it ready to go, prepared. And all you got to do is enter the price amount, the agreed upon price amount, on the contract. You're going to send it to them. They're going to be on the phone with you, and they're going to sign it right there over the phone. That's the offer and the close. So now what happens is, in this market, what we do is we take the Redfin estimate, the REI automator estimate that we just showed you, the Zillow estimate, we average them out and the average price. And here's the interesting part. First off, we never name the first number first. Seller, always 99% of our conversations with our sellers, we get them to name the first number first. We always have them name the first number first. We get their first asking price. We'll get their second asking price, and then we know where we stand. Now, more times than not, with the way the marketing we have structured in locations, because we're the only one talking to them, their price is in our buy zone, okay? And we have our buy zone here that we look at, and we're going to get their buy zone, and it's either 60%, 70% of 80% of those averaged out numbers. Now, that's assuming there's no repairs. It's fairly good condition. It's a pretty property. Maybe not pretty, but it's nice. I mean, it's a nice property. Now, let's say theoretically the property needs significant amount of work. Then what we do is we can add the square footage, the yellow on the bottom, the price per square foot. We do around $25 a square foot. It puts a repair cost and it deducts it. And we do after the repair cost to the right-hand side at 60, 70, and 80%. This is very simple. It's easy to figure out the calculator. Now, what happens is when we're talking to a seller and we say, where would you, what's your minimum cash you'd take? And they come in and they say, well, I'll take $265,000, or I'll take $311,000, right? For the property. You say, okay, great. I say, let me do my numbers and see what I can do. Well, guess what? You could sign that property. You can sign it because we're taking those estimates, and still you're going to make your profit on that property. You'll be able to make that profit, make your $20,000, $30,000 profit. Because what we're going to do is we're going to sell that property, and we're going to be the lowest available listing under that 463, 333. We're going to look at all the comps and we're going to find our exit price, and we want to be the lowest available by a significant amount. So for an example, if you got 463, right, and we're contracted here, let's say at 311, for an example, we would contract that property at like 399. Right? 463 is the average price. We contract it, right? Or we list it at 399. Now we're going to get a ton of people looking at it, and then it's going to get potentially bid up. Now, that property that we listed at 150 that I showed you there, if I go back and if I kind of look at that property at 150 that we listed, like this property right here. If you see it, we listed it 150 and we sold it for the 180, and look how fast it went. It went in 4 days. We pended that property, right? And then we turn around, we sold the property for $180,000, and we contracted that property. We contracted it for $80,000, right? And that, guess what? That was their asking price. Their asking price, like, hey, if you can give me around $85,000, it's a deal. And guess what? That was a good deal. It was in our strike zone right there. And then we listed the property and we listed it for 150. And what happens is we got a ton increase, a bunch of offers that came in, it bid up to $180,000 for that property. So that was a great deal, right? We basically can turn around and sell that thing quickly and be able to sell it. So now if we go back to the calculator over here, that's what we do, right? We turn around and we use this calculator, right? And it gives us an idea. Now, here's what I want to emphasize that's incredibly important about making offers. This is where people miss it. As the market continues to erode and decline, as inventories continue to increase, you have to reduce that number. Instead of 80, 70, 60, it's going to be 70, 60, 50, and it's going to be 60, 50, 40. There were times, and I made offers on properties in Phoenix, Arizona, on certain markets. I was making offers at literally 40 and 50%, 30 and 40% of these average prices that I'm showing you right here. Okay. So as the market, more inventory hits the market, the uglier it gets, the more we have recession and all this stuff going on in the world right now. We have to be able to pivot. And what we're going to do is we're lowering, and that's why we have this calculator, because we can lower that percent number. If I go back to the screen right here and show you, we lower that percent number. Instead of 80, 70, 60, we'll be 70, 60, 50. We'll be, 60, 50, 40. Down there. That's what it will come to as inventory increases. Think about it. As that inventory blows up, we're already at 9.3 months supply. When we get to 12, 13, 14 months supply, which I think could happen, then what's going to happen is that there's going to be a glutton of inventory. And then now we have to make offers that we know we can sell the property at, right? And can sell it low. All right, so now we're going to talk about the best closing agent, right? Here's are the three best closing agent. There's WFG, clothesline settlements. If you go to clothesline settlements, ask for Michael, and Blueprint Title. Those are the three we use. All those there. Now let's talk about listing your properties on the MLS. This is something that a lot of people have not done. They don't know how to do. And there's a couple things you need to be able to make that happen. But it's something, I'm telling you, if you're a real estate wholesaler, you want to pivot and you want to learn this ASAP. Otherwise, you will be out of business. You'll be out of business if you don't learn this super fast. We have literally a full-time person listing properties all day long. Okay, that's our exit right now during this current market, because retail buyers are still buying in this current market as pricing is coming down. And if we are the super low price in the market, then our property is going to go first before anybody else and potentially get bid up, because sellers, they don't care what's going on. They want a house. Sellers move, they migrate, they come in here. Now what happens? People always say it's like, oh, we have such a demand. We have all this demand, right? Okay. Yes, we have demand, but we have a massive inventory surge that is happening right now because a lot of people are listing. The baby boomer population that owns real estate right now is staggering, and they are wanting to divest. That becomes inventory in the market. A lot of calls we're getting are from senior owners. We have foreclosures that we haven't even talked about yet. Foreclosures will hit the market. There's millions of these bubble foreclosures that are sitting there. I mean, if we just go back and look at one statistic about foreclosures, we go over here and we go oops, what was that? Oops. Okay. We go back over here. I almost killed that. We go back over here. This right here is a downtrend. And then this is a trend reversal, right? This is for the first half of 2022, 165,000 foreclosures. You times that by 2, that means we're up to 300,000 foreclosures. I'm sorry about that, I didn't show my screen. But right here is 2022. This is a downtrend, and then this is a trend reversal right here. Now we're pivoting up. Now we're gonna see it, instead of going down like this, we're gonna see it start to go up. And we're gonna, right now, it's 165,000 first 6 months of 2022. We're going to see the numbers end 2022 around here. So we're going to go here where there was no foreclosures. It was that moratorium. And the moratorium now has been lifted as of March. And now we're starting to see foreclosures unwind. They see right now foreclosures surge to the highest levels since March of 2020. So it is coming, especially with inventory between the baby boomers and the foreclosures about to hit the market, and more people listing. We're going to have a surge of inventory, and it's already happened. We have 9.2 months supply. Now, listing your properties on the MLS, right? You want to do a flat fee listing. This is a List with Freedom. You can go on there. It shows their different places they list nationally. There's 3 important things when listing your properties on the MLS. Number 1 is seller positioning. Number 2 is the paperwork needed. And number 3 is having a flat fee listing service that will list your properties nationwide. So number 1, seller positioning. From the first of we get all of our contracts, and all of our contracts are signed with what's called an attorney in fact. An attorney in fact document allows us to list the property on the MLS. How we position the seller from the front end is we tell them we're an investment firm. We're out of Phoenix, Arizona. We do deals nationwide. We're an investment firm, and we're interested in your house specifically to make a profit. We're not going to live there, even though it looks like a great house in Morrisville, North Carolina, Morrisville, North Carolina, South Carolina. I always get those two, Morrisville, Greenville, they're all whatever. Anyway, so it's like, even though it looks like a beautiful house, Mr. Seller, Mrs. Seller, it's great, but we're here to make a profit, right? That's it. Even has that disclosures in our contract. But here's the interesting thing, Mr. Seller. We don't know how we're going to make a profit from the, as we're signing this contract and getting this done. That's part of our due diligence process to determine what is the best avenue for us to make a profit on your property, right? We could fix and flip the property. We could buy and hold and keep it as a rental. We could turn around and sell it quickly to another investor, like wholesale, for an example. Or we could list it on the MLS and we could find a retail buyer for the property, and then we'll handle all the commissions, fees, and anything like that. But right now, we don't know how we're going to make a profit. All we know is now we're going to agree to $170,000, and we're going to close it over the next 30 business days. So if you're agreeable to that, Mr. Seller, then we can move forward with the contract. So what happens is that's the way you position it. Now, if we've had a seller go, I don't want you listing my property on the MLS. Okay, so you're going to take away one of our abilities to make profit, Mr. Seller. Then our price is in $170,000. Our price now is $160,000 or $150,000. So if you're going to give us the ability and the different things we can do to make a profit, then great, we can give you the $170,000. But if you're going to limit the way we make profit, right? If that's what you're going to do, then we're going to have to give you a lower price, right? And what happens is you're straight up with people. You're straight up. You tell them exactly what you're doing. You're not going to live there. You're there to make a profit, right? And that's what you have to do. So now the bottom line is your seller positioning. We're here to make a profit. They're going to fill out their paperwork, and included in that is what's called an attorney in fact. And then what we're going to do is we're going to list it. Now, there's disclosures that have to be done when you do listings. Obviously, you have to go through a listing process. Each county, each city and state, they have different relationships, and the MLS is different in different locations, but all possible, right? That's why we have one dedicated person doing that specific job to list all of our properties. So the bottom line is that if you do this correctly, then what you have is now you have full exposure on the MLS, and you have the ability to take offers that come in either cash, hard money, or conventional. Now, this is where we go to accepting the right offer, right? Selecting the right offer. Now, if we get a cash or hard money offer in, that will supersede any other offer depending on the price, right? Depending on the price. So we got a deal in Tampa right now. We got cash offer, right? I'd rather take a cash offer than conventional offer. So it can be done quicker. You can get it closed in 7 days. Very easy. We do what's called an assignment agreement. I'll talk about that in a second. But the bottom line is it's cash or hard money. We prefer that, and you will get that on the MLS, right? Because they're scouring the MLS. There's something different about putting your property on the MLS as a protocol, as the first thing you want to do. So if you do that, it's going to open up. And guess what? Agents see your property on the MLS and they go, okay, this is my commission. This is what I do. This is how I do it. Now, what if you get a conventional FHA or VA offer, USDA offer that comes in? Can you do those deals? Yes, you can. But what we do is we list the property, we let the offers come in, and then we can select which one is the best one. And if it's cash or hard money, then we go our normal route. We'll get the property under contract. We're going to use our contract, or I think it's like a 4-page contract. We're going to get non-refundable earnest money, and then we're going to close this thing in 14 days. Now, what if they're a conventional loan? That's a little bit different. There has to be an inspection on the property. There has to be an appraisal on the property. It's going to take a little bit more time to be able to get that conventional loan done. So what we do is then we opt in the seller for that conventional offer. And what we do when we opt in the seller, we'll pay them like another $1,000 or $1,500 or maybe even $2,000 depending on the deal. And what happens is we'll get a contract from the buyer, send it over, while the seller actually sign that specific contract. And we're going to opt the seller in for the retail buyer program. And when we do that and they agree to do that, and when they sign that contract, we file what's called a notice of interest. That notice of interest now protects our interest. We cancel the initial contract, the AB contract we have with them. Now we have a notice of interest filed. And then what we do is we send it to Blueprint Title. Blueprint Title will handle the transaction, the conventional transaction with the buyer and the seller, right? And then we go through the process of closing. And then what happens is we have a sale price, for an example, at 180. We have a contract price for 120 or whatever the number is. And then what happens is what we do is we're going to pay the commissions on a flat fee listing. It's usually 3%. We're going to pay the closing costs, whatever those are. We're going to pay any repairs needed to the property. That's why we make sure we have a fairly clean property. And then whatever it is, and the difference between those fees, our contract price is going to be our spread in the deal, and we get paid at closing on a line item on the HUD. It's very simple. It's easy to do. You can get your notice of interest filed in pretty much any county across the country. And then that enables you to take a conventional offer. When you're able to structure that and pivot that and be able to do things like that not any other wholesaler is going to be able to do, guess what? You can profit. You can profit from that. You can be able to do that. And you help the seller out. You help the transaction out, and you get the thing closed, and it's a win-win-win all the way around. Now, the question is, how do you get paid, right? How do you get paid? There's 2 ways we get paid. One is cash or hard money, and we do an assignment of contract on all our cash or hard money deals. If it comes in conventional, FHA or VA, what we do is we record a notice of interest and we opt the seller in for our retail buyer profit program. We have the property, we have a buyer on the hook for the property. And we get the buyer on the hook for the property. And because we're doing this retail, it's going to take a little bit longer. We have to have an inspection and an appraisal. And for that retail program, guess what? We can raise your purchase price and give you additional money of $1,000, $2,000, $1,500, whatever it is. Now, it works amazingly well because you let the MLS bring you the offers, and then now you can determine how you want to do the deal exactly like you're portraying to the seller. Do you want to, turn around and wholesale it and quick turn it? Do you want to a cash buyer? Do you want to? And here's the thing: in these small markets, there are cash buyers. There are cash buyers sitting around looking for a deal. If you price the thing right. That's why we had that. We could have listed that property for 180, but we listed it for 150, the cheapest one there. That comes out. Guess what? People jumped on that deal. We got multiple offer situation, and it turned into 180,000, right? So it's good too. So let me show you some other people that let me do a quick disclaimer. All incomes you're about to hear are verified. However, incomes depict or represent some of the most successful participants. The majority of individuals earn less. These figures should not be considered guarantees or projections of your actual earnings. It's understood that your success is predicated on your effort, which requires hard work and diligence. So I want to share that with you because there are some incredible people that have done incredible things. Boom, $79,742 on this deal. Congratulations. It's amazing. Here's another one right here. Eric Chan, $49,000 deal. Got his deal on their first deal. Imagine that, $49,000. You know what? My daughter just accepted a job. She got out of college, went to Grand Canyon University. We spent over, I don't know how many, over $100,000. Got her nursing degree, went through the whole process, and she got hired on. She makes $50,000 a year, and she has to work, 6 to, what is it? It's a 10 to 6 every single day, and she makes 50 grand a year, right? This guy on this first check, right? And I think he's, 23, 24 years old, $49,000. Here's these guys right here. Now that's a big check right there. $129,000 deal. Not bad. Here you go. Here's another one. Got going, followed this course, 5,740% return on that one. $27,000 deal. Here's Nathan Payne, $50,000 on this particular deal. Great. Here's Dan and Christy. That check right there is for $55,000 on one deal. Now, I showed you my deals, right? Those are, obviously incredible deals. The bottom line is what's beautiful about this thing is you can do deals from anywhere in the world. If you have a laptop and have a phone, you can do deals from anywhere in the world. You can make this is a great side hustle if you want to do this part-time. If you want to do it full-time and you want to crush it, you can do that too. So you can do deals all over the place. You have the freedom to be able to make it happen. So imagine successfully completing 1 to 3 deals a month nationally. And imagine running a full-time business where you're doing close to 5 to 15 deals a month. So that's an incredible thing. Now, imagine doing all that. It'd be huge. Now, what I want to share with you now, I showed you the business model where wholesaling nationally, being able to exit properties via the MLS, continue to do business, you're making a shift, understanding how you're marketing, whether it be free methods, cheap methods, or paid methods, and learn how to do that. Now, what happens is the question becomes, what is the get rich quick blueprint? Right now, I'm not an advocate of get rich quick schemes at all, right? And this is definitely not a scheme. I actually did this myself. Now, but before I didn't really know what I was doing. Now I know what I'm doing, and I am waiting, holding tight for the right time. And we're going to talk about what that right time is. Now, do you guys know who this guy is right here? This guy is Bill Ackman. Bill Ackman turned $27 million bet into a $2.6 billion in a genius investment idea at the right time, at the right place. Now, that was his big play. His big play is that he anticipated the coronavirus and he shorted the market, and he did it with all these weird derivatives and stuff like that. But he shorted the market and he turned 2.27 million into 2.6 billion because the market collapsed, right? Now, interestingly enough, he seems like a smart guy. But he also made in January, when the Federal Reserve came out and said they're quantitative tightening, he put a bet into Netflix. And Netflix plummeted. They lost subscribers, and he lost $427 million by betting at the wrong time. Now, we talked earlier about quantitative easing and quantitative tightening. So I'm going to go back on that real quick and show you how this comes into, oops, I keep messing with the stupid thing. But we go down here, and I'm going to go back here, and we talked about this. This is incredibly important. Okay, this is the catalyst right here. This right here is quantitative easing. They pumped money into the market. They gave away free money, right? And they pumped money. They bought bonds. They bought mortgage-backed securities. They injected capital into the markets. Now what they're doing is quantitative tightening. It started in early January, and they do a rate raising campaign, and they take money out of the market. They pull money out of the market to the tune of $95 billion a month. So they started that in June. They're pulling $95 billion out of the market, and you've already seen what has happened. So now they've got to pull $4 trillion out of the market before they can actually happen. And they said they're going to do it over the next handful of years. Now, the bottom line is this, is that it's going to put us into a recession. Just like this. And we're already officially in a technical recession is what they call it. We had two back-to-back quarters with a negative GDP. That is technically a recession. I think the big recession is going to come next year as all this stuff comes to a head. But what we're seeing right here is that we're going to go into a recession, and they're continuing their rate raising campaign this year, right? They're continuing their quantitative tightening, pulling money out of the market. This pivot point, what was this pivot point? Now, during this time right here, we don't want to buy land. We don't want to buy houses. We don't want to do the Burr method. We don't want to, turn around and, I mean, even just buy, depending. Now, everything, it depends on, obviously, leverage, right? If you're over leveraged, the market's going to collapse. And you could get hurt, just like a lot of people get hurt during mobile leverage. I get hurt because of over leverage during this time right here. So this pivot point right here, this time right here, what created that pivot point? It's when the Federal Reserve pivots, and now they stop their rate raising campaign. They start their rate lowering campaign, and they inject money back in the market. Now, that could be a year from now, 18 months from now, 2 years, whatever it might be. It's going to get pretty ugly as they continue to pull money out of the market. But when we do get into like a full-blown, like massive, deep, like bloodbath recession, then they're going to have to come out. They're going to have to save the economy. They're going to have to inject money back into the market, and they're going to have to lower rates. When you lower rates, it creates that, it gets us out of the recession. That is when you see lowering rates and they do quantitative easing, equities expand, real estate expands, and commodities expand. Stock market's going to go up, the real estate market's going to go up, and commodities are going to go up. That's when you invest. That's when you pump money into houses. So the bottom line is, if we go back right here at this quantitative easing, quantitative right here, when they started quantitative easing, and what happens? You have the forced appreciation that goes down because of the market shift. So what do we do, right? How do we capitalize on that? Well, what we do is this. This is Michael Burry talking about he's the Big Short. But what we're going to do is two different things: land acquisition and entitlement at the time they start their quantitative easing, and we're at the peak of inventory. So two things makes the decision: a peak of inventory, then they start quantitative easing, and they start a rate lowering campaign and inject money in the market. When they start quantitative easing, right, then I'm going to look for large land acquisition and entitlement projects. You buy large plots of land and you force entitle it, then increases value, and you have forced depreciation through the changing of what you're going to do with the property, right? The highest and best use of the property, and you get forced depreciation because of the market correction is getting better. And we're going to do the foreclosure squeeze. Now, let me tell you about the foreclosure squeeze. We see that the Adam data foreclosures are increasing like crazy. We talked about the foreclosures. Right now, there's 1.7 million homeowners in forbearance, 4+ million homeowners late on a mortgage, 8.4 million renters facing eviction. It's coming. So deal structure. I got to go real quick through this. So $277,000 of property's worth. Okay, follow me here. You got to follow me here because this is really important. House is worth 277. Seller owes 165. This is a pre-foreclosure deal. It goes to auction in 45 days. Back payments are 12 grand. And that's to bring the property current. Current equity in the property right now is $112,000. The offer to the seller via a purchase contract and an addendum offer the seller $5,000 net to move, right? How much cash would you need to move? We wrap the existing $165,000 note for 5 years or more. Monthly payments for $740 on that $165,000 loan, roughly. This is a theoretical example. And we agree to pay the settlements of any back payments, liens, mortgage, late payments, judgments, or attorney fees. Why do we do that? Because if that 165 is comprised of a first mortgage of 100 and second mortgage of 65,000, they put in a pool, we can renegotiate that 65 down to pennies on the dollar because the first loan is going to foreclosure and any junior liens will be wiped out. Okay. It's very important you understand that and know that how that works. Cause I've taken $80,000 down to like $3,000, $50,000 down to $1,500. So, it's incredibly important. You can negotiate second tier debt behind a senior debt that is actually going to foreclosure. So now total cash needed, we need 12,000, right? To reinstate the loan and bring it current, and 5,000 for the seller. So we need about $17,000 to close and own that property. We're going to have the deed to the property. Now, a couple different things we could do. We could do an agreement for sale or a lease with a purchase to option, an option to purchase. Now, I like them both. If you do a lease with a purchase, you could do an 18 to 36 month lease with an option to purchase. You can do a sales price or appraisal, whichever's higher, right? Now, when are you going to do this, right? When are you going to do this? You're going to do this at this time right here, When we are at the peak of inventory or the Fed comes out and they're going to start their quantitative easing process. So we're going to look at inventory peak. We're going to see where they are. And that is what, now we're going to see the inventory is going to start coming down, and we're going to do our land acquisition. I'm going to look for large tracts of land, and we're going to do this method right here, the squeeze method. And what we're going to do here is 280,000, right? Then we're going to do a lease with an option to purchase, or we're going to do an agreement for sale, land contract, or contract for deed. Now we're going to do a larger down payment, $40,000 down payment. So now we're flush, right? So now we're flush. We put 17 out, we got 40 back. Payments are $1,800 or more, depending on what the rents are. Our payment on that mortgage, right? Now, see, let me just say one thing too, real quick. Now, mortgage rates, we know, are going up, right? Mortgage rates are going to continue to go up. If we do this model right here that I'm talking about, we'll be able to basically turn around, and as these mortgage rates go up, we'll be able to at that time, for some of these houses are going to go in foreclosure, we'll be able to lock in someone's loan that has a 3% or 4% mortgage when rates are currently at 8 and 9%. Right. And we'll be able to lock that loan in for a significant term, and we could do it for, roughly 5 years or more. Right. You do. I've done them for 30 years. I've done them for the entire balance of the loan. So now we do a seller carry for 240,000. And now what do? Now this is the squeeze, and we sell it with a lease purchase, and we turn around and we arbitrage the down payments. That means 17,000 cash out of pocket minus 40,000 we got as a down payment, $23,000. That's new money coming into you. That's your business. Payment arbitrage. This is monthly cash flow. And that's $1,060. That's your cash flow. Over 5 years, it could be longer, is $63,600. Sales proceeds 240 minus 65, that's $75,000. Total profit. So you have not only now money, you have later money of 75,000, and you get cash flow along the way. Now, what if you do 10 deals? Well, that's 230,000 cash, 750,000 in equity to your net worth, 10,600 monthly cash flow that comes in on those deals. That's $1.6 million profit. What if you do 50 deals? That's $1.1 million cash, 3.75 in equity, $53,000 a month in cash flow. You turn around and you do 100 deals. That's 2.3 million cash, $7.5 million in equity, $106,000 or more in monthly cash flow as rents raise. Total profit, $16 million, $160. Now, remember that for me, in late 2003, early 2004, I started this model, and I built a portfolio of 120 properties, $36 million worth, for that next 12 to 14 months. So I went out and we foreclosures, knocked on foreclosure doors, sent postcards, sent letters, foreclosure called us. We talked to them. We agree to leave their existing loan in place. We give them some cash. They move out. We clean up the property and we'd sell it on a lease option or an agreement for sale. And we hung on those properties and we sold those as packages and to California investors. 99% of them, we didn't do many agreement for sales. We did lease options, long-term lease options on those. And we sold them to investors that bought those in tranches. So that was 120 properties in about 14 months. So I'm saying if you guys did 100 properties, that's a huge amount of equity. You do 200 deals, you're talking 4.6 million cash. $15 million in equity, $212,000 in monthly cash flow. Here's the question. That's $32 million in total overall profit. Now, when are you going to do this? You're going to do this, right? When we're at peak inventory. We're at peak inventory. And the Federal Reserve comes out and says we're quantitative easing and they're doing a rate lowering campaign, right? And like I said, I think we have until next year, mid to late next year, they're going to come out. And I think we're going to be in a deep recession. And I think there's at that point in the next, 18 to 24 months or so, maybe even less, they'll come out and they'll start their quantitative easing process. Gives us time to wholesale our brains out and be ready. Because the cool thing is that this essentially self-liquidates. So I call this the Get Rich Blueprint, which is amazing. Now, I got some exciting I want to share with you. What I decided to do, because I had so many wholesalers hitting me up from that I spoke at events and they go, oh my gosh, how do you do this? I want to learn how to do this. How do I do this? How do I do it? Man, people are doing the wrong things at the wrong time. People, doing the BRRRR method right now. You don't want to do that right now unless you have massive amounts of equity, 50% equity, I'd do it. Right? Because who knows what could happen. We have a faster correction in housing that I've ever seen in my 20-year career doing deals. Now, I've had people reach out to me and they go, how do you do this? So you know what? I decided to put together something where you guys can learn exactly how to do this. Bear Market Millions. Bear Market Millions is a course that teaches the entire thing. Exactly the 7 steps we talked about, plus the Get Rich Blueprint that we're going to talk about. So it talks about all of those. And it's a course I'm teaching, and you get to have access to, which is amazing. So if I go back over here, Bear Market Millions, what is it? It's a timely, right now, strategy to confidently do 1 to 2 deals a month in a recession using none of your own cash or credit. It's a 4-week masterclass that includes 1 week of the Get Rich. The last week is the Get Rich. And it talks about where and when to do what and when, how to structure the contracts, how to negotiate with sellers to get them to leave the loan in place for indefinitely, right? This is the course. It's a brand new, absolutely never been taught before. And we're going to talk about selecting the right cities. We're going to talk about a cheap method, or actually a free method to find sellers using my scripts, a cheap method to find sellers, and a paid method. So we're going to talk about those. And then we're going to talk about how to make strategic offers following the 4-step process to get the deals done. We're also going to talk about how to sell your properties via MLS. We'll show you how to do a listing. We'll show you how to position with the seller so you can get the listing paperwork and the disclosure signed and the attorney in fact signed. What does that look like? You actually hear calls of us doing that. And then we're going to talk about the Get Rich Quick Blueprint, which is going to be awesome. Now, this product is a $997 value, brand new product. With it comes a bonus of the REI Automator software that we use for skip tracing to pull lists, just like we showed you. There is a activation fee of $897 in access, so you get that. We're going to waive the access of the waive the $897 fee, and you get 1 month for free to check it out. So all this right here is a $1,991 value. Bonus number 2 is I get on calls every other week with you, where either myself or Brandon gets on a call, where I will show you well, I'll tell you exactly what we're doing in our business. We'll talk about a market update. It's a $29.97 value. All that's $4,998. So you get all this, right? $997, or you can do a 3-pay of $397. And you can use PayPal credit if you want. That's Bear Market Millions. All you got to do is go to getbmm.com, getbmm.com. If you use that coupon code, we have a limited amount of people you're going to use this coupon code. And if you use that coupon code BMM40, and if you do that now, you'll get 40% off. The retail price is $997, so only $597 or $210. At a 3-pay. So it's not $29.97, not $19.97, not $9.97. It's 40% off that price for a limited time. I have, and the reason why we're doing this is because it is such a timely thing. I want to get it in people's hands. And that's what I paid when I first got started and I started learning this business. So use that number. It works out well. So you got 2 different options. You can figure out how to wholesale during a recession, right? And you can test marketing campaigns. You can figure out how to list properties yourself. You can figure out how to position sellers yourself, not knowing what to offer, even how to calculate the repairs because you don't have a spreadsheet, right? Not selling for the highest price possible because you're trying to sell the cash buyers or undercutting you. You're having to go back and renegotiate. Being unorganized and losing deals, trusting the wrong people, structuring the wrong deals with your partners. If you do that, missing the opportunity to turn around when the market pivots to go out there and crush it, not knowing how to get paid. Nothing is more expensive than a missed opportunity and not knowing what you don't know. So you lose thousands and thousands of dollars. So get access to Bear Market Millions. We also got some other unannounced bonus. We have something called Deal Conversion Pro. This is specifically a training course that I created for my acquisition team to convert deals over the phone. We're going to throw that in as well. It's a $997 product. You get that too. So you have immediate access to that, which is amazing. Immediate access to the REI automated software, which is great. You can get part of the coaching calls. So that's Deal Conversion Pro. We have a 30-day money back, no questions asked guarantee. If you don't think it's absolutely amazing, you can just ask for your money back. Remote Millions course here, $997. Software, calls, Deal Conversion Pro. Plus, I'm going to do a 1-day coaching call basically just around this particular method and what we're doing. I'm going to open it up for everybody as part of Bear Market Millions. And I'm going to get on a call. Probably be a couple, 2-3 hours. I love doing long calls actually. And we'll get on there. We'll answer questions and you can get on there. And we're going to have a great day. We're going to talk about the process of what we're doing, all the tools we use and everything like that. So we have an unannounced bonus. You get all of our spreadsheets, forms, and contracts, $4.97. Also, you get deal or no deal by Brandon. Every other week he gets on and he'll actually go through and look at the properties and show you if it's a deal or no deal. Go through the process of comping them and looking at that, their value and what they would offer. So then you understand exactly how to do deals. It's a great service. You can get on there. You can bring your deals and you can understand what happens. Access to our Facebook only group. We have also an open Discord group. You can get on there and ask questions. It's really awesome too. So all you got to do is go to getbmm.com, getbmm.com. Go there, only $5.97 or a 3-pay of $2.10, and you're going to learn exactly how to wholesale during a recession, list properties, and pivot. So that is what we're going to talk about. We got a lot of stuff. There's part of it right here, but the world is changing when it comes to real estate right now. So you got to be able to adapt and overcome to what's going on. And I can tell you, understanding this process, how to market, how to talk to sellers, how to educate sellers, and then be able to how to get deals done is incredibly important. So go to getbmm.com, getbmm.com. I think if you go there, right now, let me see if I can go there. Get the let's see. If you go there right now, get BMM, and then I'll open it up for questions. How do we want to do questions, Alex? So if we get BMM.com, if you go here, you can go here and you put the coupon code here, and you'll get 40% off or 40% off of the 3-pay. So if you do that, you can get signed up and get started. And this is everything you get part of this course, which is awesome. So this Bear Market Millions, getbmm.com, getbmm.com. And it's only $5.97, and you'll learn exactly everything that we went through here that's on that page. So what do you want to do for questions? Lee says gas quantitative easing, massive push for stimulus package to save. Yeah, exactly. Play on the video above. How we started. Ugly house, big checks. Yeah, it's true. 222. Any other questions? Oh, yeah, if there's no other questions, then yep, quantitative easing. All right. So, any other questions? I don't think I see any other questions coming on. Now, the question is, can you do this? Can you do this when the market shifts? This strategy, doing deals nationwide, first off, it's obviously the right thing to do. And because if you do your local market, I did my local market for probably 15 years. And in my local market, there becomes restrictions on what you can do for scalability because you do every single marketing method know the man. I would drop 100,000 mailers. I would max out my pay-per-click advertising. I do all sorts of stuff. The bottom line is that nationwide is something where you can get deals all across the entire country, and you don't have to actually visit the property, which is great. I will walk in houses and the cat pee smell was disgusting. It was terrible. I'd walk into houses and, and they're just disgusting. Now we can do everything over the phone. You can do it remote, which is amazing. And then if you're able to list properties, you have agents to go show the properties. It's phenomenal. So all you get to do is getbmm.com, getbmm.com, go there, and we'll do that. Yeah, he says, I will say listing properties via Strong Study is awesome. Just did our first two. Two what? Was this say two? Cool. Yeah, Sean, have closer to the mic. I'm sorry about that. Is this the same as Retail Buyer Profits course? No, it's not. Retail Buyer specifically talks how to do retail deals via obviously retail deals. This is exactly how to do deals nationwide when it comes to doing deals over the phone, getting properties under contract, and then be able to exiting those property using the MLS as a disposition process. So no, it's not exactly. It takes a element of it, but it's not that full course. Any other questions? I'm surprised. I usually yell in these mics, so I'm like, well, I kept on going back like this because I feel like I'm yelling in the mic. So yeah, if you guys have no more questions, that's great. Thank you so much for being here. Greatly appreciate it. And I'll see you in the future. And I wish you God bless and go out there and crush it in this crazy real estate market right now. So go have fun, and I will talk to you. God bless.